Been called one of the most disruptive and innovative forces in the ETF world today. She's also one of the most successful. Cathie Wood's signature Ark Innovation fund returned an astounding 148% in 2020, and she says there's still a lot of runway ahead. Cathie's the founder, CIO, and CEO of Ark Invest, and she's with us now in our ETF Edge along with Bob Pisani. Cathie, it's nice to see you again. Welcome to Halftime. Bob, why don't you start us off?
Cathie, great to see you, and what a tremendous year it's been for you. You now have over $50 billion in assets under management, and your flagship Ark Innovation Fund's up nearly 20% this year alone. But I've got to start with your biggest holding. It's Tesla in the Ark Innovation Fund. It's also in the Next Gen Internet Fund. It's also in the Technology and Robotics Fund that you run. How do you feel about Tesla's price now, and are you still adding to your position?
Yes. Well, as you know, we report our trades every day, and you will see that we have been adding to Tesla. Our confidence in Tesla has grown as we've done research on what ride sharing potentially could add. It could limit the risk significantly. It's a much more profitable business than electric vehicles. And we do think, even though I think there's some debate at Tesla whether or not they should launch a human-driven ride-hailing network, it would be a very good bridge, we think, to their autonomous strategy, and we think they will decide to do that. I don't think anyone has in their models anything for ride-sharing. And then as time goes on and we learn about their artificial intelligence expertise, the 30 billion miles they've collected of real-world driving data. No one comes close, not even, I think Google might be at 30 million compared to 30 billion. And we know that in the AI world, and autonomous is AI, that the company with the most data and the best quality data will win. So we're pretty excited about autonomous, and the probability of success in autonomous we believe is going up, and therefore our price target will probably follow at some point.
Okay, and Bitcoin is on everybody's mind right now. Your Next Gen Internet Fund has a very large position in the Grayscale Bitcoin Trust. Your thoughts on this? Your thoughts on Bitcoin? A Bitcoin ETF for 2021, is it coming? And do you have any concerns that the Grayscale closed-end fund still trading at a pretty significant premium?
Well, the premiums come down quite a bit. I think now that we know that the next SEC commissioner is going to be David Gensler, who spent the last few years at MIT teaching a class about blockchain technology, Bitcoin. I think he understands the technology and he understands the currency itself. So I think the probability of an ETF has gone up. We also know that the director of research for crypto in the crypto space at the SEC has been promoted and will be reporting directly to Gensler. So again, I think we have individuals now involved who really understand the space. And I think the likelihood has gone up. What has surprised us, we expected institutional interest to pick up this year, and it certainly has. But the way in which it's picked up has surprised us. I don't think we ever thought there would be broad-based substitution of Bitcoin for cash on corporate balance sheets. So we find that very interesting. If all corporations in the United States were to put, I think it's, 10% of their cash into Bitcoin, that alone would add $200,000 to the Bitcoin price. Now, we obviously do not believe this is going to happen very quickly. We're talking about maybe the equivalent of $900 billion market cap equivalent for Bitcoin. That's less than half the price of the Apples and Amazons of the world. So this has to mature a little bit before broad-based adoption can take place. But we're very reassured that companies like Square and Tesla have chosen to allocate. They're on the right side of change when it comes to innovation, and therefore we think it's wise that they diversify some of their cash. And I think the biggest surprise to many Tesla doubters is that it is now in a position where it has that much cash that it is diversifying.
Now, you've been directionally right on a number of other big stock bets, including Teladoc. This is your largest holding in the Genomics Revolution Fund you run. It's also a big holding in the Innovation Fund. It's up about 40% this year. It's got a $40 billion market cap right now. This is telemedicine. Is telemedicine really going to continue to shine once COVID recedes?
Well, we had a great opportunity to buy into Teladoc when the stay-at-home stocks were starting to flatten out as the vaccine was on the horizon. Teladoc was one of those stocks, and it then was hurt by an acquisition it made, Livongo. This is a beautiful acquisition for Teladoc. The most important variable, again, I'm going to come back to AI over and over again, because we think that is going to represent $30 trillion in market cap during the next 10 years. And we are just beginning. So with Livongo, Teladoc now has one of the best artificial intelligence teams and some of the best data. That's the other thing we'll come back to. Most data, best quality data. And we think the combination of Teladoc and Livongo is going to be a powerhouse. One services more the acute setting in medicine, and that would be Teladoc itself primarily. And Livongo is more involved on the chronic side. So chronic conditions, kidney conditions, mental health, and so forth. So we believe that with this data, these two companies, now that they're together, now that they put their AI teams together, are going to be able to make help make the healthcare ecosystem better, cheaper, faster, more productive, more creative. What we say about all kinds of innovation, they're in a beautiful position to do this.
Cathie, it's not just Teladoc. This is Scott now. It's not just Teladoc out of your signature innovation fund that has enjoyed spectacular gains over the last year. I'm looking at the list of your top holdings, whether it's Spotify or Shopify or Zoom Video, for example. The gains have just been tremendous. I'm wondering what happens when we get on with the rest of our lives after COVID, and how do you think about taking profits, even though I know your typical sort of outlook is a 5-year time horizon? It doesn't mean you can't take profits every now and then and redeploy capital elsewhere to some of the laggards, perhaps. How do you think about that?
Sure. Well, the last year has been instructive. During the coronavirus crisis, we consolidated to our highest conviction names, especially those that were tormented by, I would say, algorithms who were looking for small cash cushions and cash burn. And so we had great opportunities to buy stocks at a fraction of the cost from just a month earlier. Certainly Invitae and Zillow were two of those stocks. And then they've had magnificent runs. Many, Square would be in this category as well. Many are up 5 to 10 times. Tesla is also in that category. There was a lot of fear about its condition. And then what you saw was the stay-at-home stocks start to flatten out. So toward the end of last year. So some of the stocks into which we had concentrated our portfolios, they were up, as I mentioned, 5 to 10-fold. We started moving back into these stay-at-home stocks because it seems to us that many analysts and portfolio managers believe that after the vaccines make it through our population and the rest of the world, that these stocks will be done. We actually think that innovation makes the world a better place generally in the ways I described earlier, and that the coronavirus has accelerated the shift towards these new ways of doing things, these new ways of spending time. So we were happy to get the reprieve in some of these so-called stay-at-home stocks in the last, I'm going to say 6 months. It really started in July, August, giving us time to move out of some of the names that had taken off and into those that were marking time. So that's what we do. We are considered a liquidity provider, which means when people are selling, we will be buying. And when people are buying, and these are investors and retail and institutional, we are likely to be taking profits, as you say. Taking profits is never a bad idea.
But can you envision owning, for example, a Zoom in 2 to 3 years? Or will you have moved on to something else because the world has changed?
Well, I think the world is changing because of Zoom. And I think we're going to be working very differently in the future. Sure, there's going to probably be a combination of in the office and stay at home. But now we know it's possible. We look at Zoom in the context of the tech stack. And if you look at the tech stack, the enterprise communications layer is the biggest. It's a $1.5 trillion layer. This is where Zoom is playing. And they're starting to add features to their services. And I think all of us will agree, my experience with Zoom is it is the best platform for video, is the easiest user interface. And I do believe that it will pull away from the pack.